Actually, Jaydeep says it's all good now.
Yeah, so thanks so much for joining us here on this webinar with none other than Rajan Anandan. You don't get a more authoritative voice when it comes to the startup ecosystem. Just a quick introduction, though I don't think he really needs one. A prolific angel investor. He was heading Google for in India and Southeast Asia for nearly a decade, about 8 years now with Sequoia Capital. Very passionate about mentoring startups, nurturing them. Is the president of the Thai Delhi NCR chapter as well. So with that done, Rajan, we've decided to call this series Reimagine. I have to say that after Rajan came up with this name, I thought a lot of John Lennon and the song Imagine. I think it really holds true what we are seeing today. But Rajan, I want to begin by saying that nobody imagined this, unless of course Bill Gates did warn about it, but no one imagined this. We don't know when it's going to end. It's a medical problem. It's a war on two zones, the health front and the economic front. If there was one aspect of the economy where we saw so much enthusiasm, it was in the startup universe. And the founders today just don't know what to do. I'm going to lean on your expertise. I know you've been doing a lot of webinars. You've been talking about the cash runway. Very quickly, let's begin with your suggestions to the startup universe on survival.
Yeah, absolutely. Well, thank you, Nayantara, for having me, and want to thank all the startup founders who are on the webinar. First and foremost, I hope everybody is safe. I think in the current environment, most important thing is your safety, your family's safety, your team's safety, and your loved ones' safety. Look, as you mentioned, Nayantara, I think we all know now that this is a crisis at a global scale, at a magnitude, at a level of severity that the world hasn't seen over 100 years, right? It's a healthcare crisis. It's a health crisis first and foremost. It's also a humanitarian crisis and has quickly evolved into an economic crisis at a scale that we haven't really seen before. So, every business around the world, it doesn't matter whether you're a very large company, whether you're a mid-sized company, whether you're an SME, or whether you're a startup, is very, very challenged, right? Is going through the exact same set of challenges that that we're all going through. In many industries, especially if you're in India, revenue is down to zero. Everybody is working from home, except for those obviously who are, if you're in healthcare delivery, or if you're in e-commerce or logistics or fulfillment, some people are, back to work. But by and large, it's sort of an unprecedented environment, right? I don't think in the history of the world we've had a situation like this where at last count, I think 180 countries were at some level of lockdown. And that obviously poses very, very significant challenges. And I think for the startup ecosystem, look, I think what's happened in the last 10 years is extraordinary, right? We've created the third largest ecosystem in the world. We have, over 40,000 startups now. We had $14.5 billion of venture capital come into the country last year. We have 30 unicorns. We are creating companies. We were creating companies at a pace we hadn't seen before. But I think in many ways, this is sort of a moment that is going to redefine many, many things about every business around the world, including startups. So I think it's an extremely important time, and I would say, as I'm sure all the founders who've been who are on this webinar, I'm sure have been to many other similar sessions. I know at least every founder that I know has been to many other sessions. And if there's one thing that you need to be doing, or two things I would say that you need to be doing immediately, is first, make sure you're taking care of safety of yourself, your teams, and your families. But the second thing is just extend cash runway, right? It is the single biggest thing. When you get into an uncertain environment like you are in today, if you have 3 months of cash runway, figure out a way to make it 6 months. If you've got 6 months of cash runway, make it 12 months. And if you have 12 months, try to make it 24 months. We think, 24 months of cash runway as a startup today, I mean, that would, sort of get into a zone where you can be comfortable. But if you have less than that, we'd say you really aren't comfortable, because as you said, Nayantara, we just don't know how long this is going to last. We know for a fact it's not a 2 or 3 month phenomenon, right? I'm not talking about the lockdown, but I'm talking about the likelihood of multiple waves that are going to hit us, the likelihood of multiple sort of maybe not nationwide lockdowns, but certainly citywide and sub-citywide lockdowns, and in general, sort of healthcare and economic crisis that's going to last many quarters, if not several years. Nayantara, I don't know whether you're there.
So you talked about the cash runway, and I know in the past you've been talking about how you must have a cash runway of 24 months. But I'm going to ask this question on behalf of a lot of startups who may not have that luxury, who don't have that. They may be very young, or they may have, even raised funds and we're using it for growth, and they don't have visibility for 24 months when it comes to cash. They don't have any income coming in. They're also not allowed to announce layoffs with the government directives. What are they supposed to do, Rajan?
By the way, Parul has a request on chat that they want to see you. So I don't know whether your camera is on or off. I'm just, it's on chat. So look, first of all, very few startups will have 24 months of runway, right? I mean, you have to be a very well-funded startup to have 24 months of runway. All I'm saying is, look, that should be sort of your gold standard. Look, most startups in India, I mean, there are over 40,000 startups. Most startups in India, I think, have 1 or 2 months of runway, right? A large number of them. So I think, look, it's not about 24 months. I think just think about extending your runway, right? So how do you extend your runway? The thing that you can control the most is your cost, right? Especially if you're in an industry that is deeply impacted by the current lockdowns, where your revenue is sort of zero, right? Your revenue has probably been zero for 4 or 5 months, 4 or 5 weeks, and then at least for another couple of weeks. And we'll have to see what happens on May 3rd. In terms of cost, we've, talked about, I think in many forums, we've talked a lot about this, but, take sort of a zero-based, approach to cost, right? Question every single line item that you have in your cost. Take a simple thing like rent and leases, right? I think a lot of startups, especially early stage startups and even startups with few hundred people, are beginning to ask this question, right? Which is, hey, look, the last 4 or 5 weeks, they've been able to work from home. Do they need to pay lakhs and lakhs of rent? Sometimes, 30, 40, 50 lakhs of rent, right? The answer is probably maybe not, right? So then take a look at every single contract that you have, right? Whether it's your software licenses, whether it's your cloud bills, take a look at your marketing spends, and then obviously take a look at some of your other costs, like your people costs, and ask yourself this question of, what if you were to start up today and you were starting up today in the environment that you're in today, right, where there's so much uncertainty about demand visibility, about when that industry is going to come back, etc. What would you do if you were starting today? And I find this notion of, if you were starting today, what would you do, is a very important question. And I can tell you many companies or many startups would actually do things very differently if you were starting up today, right? Now, obviously, you're not starting up today. You're starting off with, an existing set of infrastructure that you have. But if you actually, and that's why I think this reimagine theme is very apt, because you can, I think the first thing you've got to do is you've got to reimagine your cost structure, right? And you have to make very difficult decisions. You have to be very thoughtful, and you have to be very decisive, because I think the startup founders who are going to make it through this and still be around and thriving, let's say at the end of 2021, are going to be decisive. They're going to be very thoughtful first and foremost, because you have to think through this, right? You can't make bold decisions without being thoughtful. You have to be thoughtful, but you have to be very decisive. And I think that, that's what we've seen. Look, I can tell you, look, we've seen companies that have, let's call it 6-8 months of runway, that now actually have 20 months of runway, because over the last 4-5 weeks they have taken a set of decisions.
So Rajan, you have to do very harsh cost cutting. Incidentally, I can now see you. I see you've got the Golden Gate Bridge behind you.
So there you go. Yes, everybody's been commenting on that.
My viewers can see me too. I don't know what the technical problem was. I can see you're playing with San Francisco and the Silicon Valley with that gallery view that you've got with the Golden Gate Bridge, the landmark of San Francisco. So now with cash runway done, and you've said that people have been able to figure it out, how to increase 6 months to 18 months and things like that. If you look at the startup universe, the ecosystem is made by very passionate people, right? Pardon me for being cheeky. They perhaps have said no to jobs at Google. They said no to jobs at Facebook. They're following their passion. Is it also time now where they have to realign and figure out that whatever it is that they wanted to do is not going to be possible at the moment? They've got to have a new dream, and maybe not dream as big.
Yeah, look, I think, well, firstly, I wouldn't say, look, as entrepreneurs, you should always dream big, right? But I think the theme of this webinar is reimagine. I do think founders and leadership teams of startups should really reimagine many aspects of their business, right? But before I get into reimagine, I have an interesting statistic, Nayantara, that 50% of the Fortune 500 companies were actually started during a recession or right after a recession. So in many ways, right, there's no better time to be building a company because this is the moment, or these are the sets of periods that make you a very, very strong company, right? That make you better as a founder, that make you better as a business. Now, let's now move to this whole reimagine, right? Look, the extent to which you need to reimagine your startup really depends on the industry that you're in first and foremost, right? So for instance, if you're in an industry that is deeply impacted, that is unlikely to recover, let's say, over the next 3, 6, 9 months, right? Let's pick 2 or 3 that we know. International travel, hospitality. If you happen to be in the offline retail business, only offline retail, right? In a non-essential category. I mean, these are going to be sectors that are very, very deeply impacted, right? Now, as a startup, so that's the first thing. Second thing is, your stage of development, right? If you're a very large established company, with thousands of crores of revenue before, let's say, lockdowns or before COVID in the international travel space, it is harder to completely end up in a different industry. But if you're a very early stage company, so let's say, right, you launched a couple of months ago and you were fortunate to raise some bit of capital and you're in the international travel space, I think you've got to ask the most fundamental question, which is, what business do I want to be in? In fact, I had this discussion with one of our companies last week, right? It's a very early stage company. It's in the international travel space. And we said, look, what question, it kind of very quickly, the founders themselves said, look, maybe we should actually look at other industries, right? So that's at one end of the spectrum. I think on the other end of the spectrum, you have a few set of industries that have a lot of tailwind, right? And we think are going to structurally be much better off, right? These are industries like online education, gaming, remote work, collaboration tools, and also healthcare broadly, right? Health, digital health, wellness, industries like that. And these industries, and even some segments of e-commerce, right? Like online grocery, food delivery, online pharma, etc. These industries, I think, are going to see a lot of tailwind. And those industries, actually, what we're seeing is startups doubling down, right? They're actually going to invest more. They're going to hire more. They're going to actually accelerate. And then for them, it's about how do you accelerate growth, but do it very thoughtfully. For all the other industries, which is pretty much everything else, right? Our view is that you have to reimagine many aspects of the business, right? And, it could be product, how you think about product. It could be sales. It could be marketing. It could be how you think about supply chains. It could be what you do in, your go-to-market approach. So the level of the extent to which you need to reimagine is first and foremost a function of the industry that you're in, right? And so you have to really, and we think this is the right time to be asking very, very fundamental questions like, what business do I want to be in? Right? You're in a certain business, but you should ask this question, right? Who is the customer I want to target? You may have been selling to a certain set of customers, but maybe that is not the set of customers, right? What products do I want to really take to market, right? How do I want to go to market? For instance, if you're a consumer products brand that was, let's say, selling only largely through offline retail, and you're not an essential product, right? So let's say you're a premium beauty brand. There are a lot of beauty startups, beauty product startups in India that was largely selling offline. That's sort of a difficult combination. If you think about that business, as I just described it, is quite a tough business over the next 12, 18, 24 months because consumers are going to downgrade. So just being only in premium may be a bit challenging. And secondly, it is very likely that, much more, beauty, by the way, is pretty penetrated already online from e-commerce, right? It's going to be, that's going to significantly accelerate as soon as things open up. So I think these fundamental questions should be asked by every founder today. And that's why this notion of once you've actually got your runway extended, you'll never have enough runway. I think now the time is to really reimagine your business and look at every single aspect of your business.
You're also going to have to reimagine consumer behavior, right? Because, okay, if we are in the midst of a lockdown, we don't have a medical breakthrough at the moment, but consumer behavior perhaps is going to be different and irreversible for some time. You touched upon, let's say, ed tech, online education. Now that parents have, got a chance to experiment with it, children have, schools have, it's pretty clear it's here to stay. Those who may not have been using online platforms for groceries, they're going to be using it. Healthcare, medicine. So, you're going to see a fundamental change in consumer behavior. So for those who are already in this space, is it going to get overcrowded, you think? Because suddenly there's going to be a rush of founders and startups that are going to say, hey, I want to do online education. Hey, I want to do online deliveries and things like that.
No, so look, I mean, firstly, I think this point that you made, that consumer behavior, if you do something every single day, Nayantara, for 30 days, your behavior starts changing. If you actually do it every day for 60 days, it completely changes, right? So anything that you do for 60 days every day actually makes you change your behavior, because then it becomes sort of how you do things, right? So and several of these spaces that you mentioned, like, by the way, if you look at online education, students were okay doing online education, right? And by the way, this is an industry that was already growing quite quickly. The two stakeholders that really needed to have a lot more buy-in, one was the parents, right? Because they were like, look, I mean, it's much better for you to go to a tuition center, or you have to go to school, etc. And second actually was the teachers, right? The teachers weren't, some teachers are very digitally savvy, but, by and large, teachers, were slow to embrace technology. What has happened in the last, let's call it, 4 or 5 weeks in India, is these two things are beginning to change, right? And by middle of May, they would have changed, right? Because if you're a teacher and you happen to be in a school that's offering, let's say, online education for your students during the day, you are figuring out, right? And, in the next couple of weeks, you would have figured out, and you'd say, you know what, this is not that bad. So you've got them on board. And then parents are now seeing, well, actually, this is not bad, right? Because it works. So because of that consumer behavior change, you mentioned several of them, right? Actually, I think one of the single biggest changes in our behavior is going to be hygiene. Around the world, 7.3 billion people, if they can afford it, and the reason I say that, there are parts of the world where hygiene is still not affordable or not available, right? If we can afford it, we're going to be obsessed with hygiene, right? You're going to want to know who sat on that chair, before you sit in that chair. That's why I think places like movie theaters and restaurants, are going to have to really reimagine their businesses, and that's because that's a consumer behavior that has changed, right? And as a result, businesses are going to have to adapt. We are probably going to see a large number of companies getting into online education. We're already seeing, a whole set of new kind of, grocery startups, startups that are enabling kirana stores. We're seeing more, like, for instance, right, 2 weeks ago or 3 weeks ago, telemedicine became, was approved regulatory wise, right? It was in a gray zone. So all of a sudden now we're seeing explosive growth in telemedicine, and you'll see, new startups that will come on. I think with every other startup that has been successful, the most important thing is meet a real need, build a product that your customers love, right? And make sure that they continue to use it, and over time get them to pay you more than what it costs you, right? So yes, some of these spaces will see a lot more companies, but I think we've seen a structural change in those industries, which is very, 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 very encouraging. I'll say one more thing, by the way, on this. Like, for instance, if you're a restaurant, like, let's take my favorite restaurant, Indian Accent, in Delhi. You've got to be thinking, how can I now deliver? How can you make your restaurant a cloud kitchen?
Yeah.
Right? And how can you actually embrace a set of hygiene standards that are truly world class? Because, not only do I want to know who cooked my food, I want to know who delivered my food. I want to know everything there is to know about this, right? And even when we all go back to restaurants, I think some people will go back to restaurants sooner than others. They're not, you're not going to have your 10 best friends, right, crouched up, in a restaurant in Car Market. I mean, that's, like, guaranteed to get COVID, you should call the restaurant like guaranteed to get COVID. COVID's on the menu, because, otherwise, you better be really, really careful. And so these things are very fundamental.
So these are the opportunities that you're seeing. And I'm going to just ask the one question I know that a lot of people have logged in to ask. What's going to happen to fundraising? Is it a given? Forget about fundraising for 18 months, 24 months. Make your plans, assuming you're not going to have perhaps any investment coming in, unless, of course, you're Reliance Jio and you're able to impress Mark Zuckerberg. That's, of course, an exception. It's the largest tech deal we've seen. But there have been others. You look at Setu, for example. It was able to close the deal, but it's in a very relevant sector at the moment. So are they going to have to just worry about survival, carrying forward without having to worry about funding?
I think first of all, look, I think survival is a given, right? To be in business, you have to be in business. So, first step is be in business. I think now the time is to reimagine, right? And which I think is very important, because if you only have a survival mindset, you can't reimagine Nayantara. So founders have to get into this mental model that says, look, I'm going to reimagine, and not only am I going to survive, but I'm going to thrive. And the only way you can thrive in an environment like this is to reimagine. Now, on your funding question, look, there are a couple of things that that we know from the data, right? Funding has slowed down. So you look at the data for March, funding has slowed down. You look at the data for April, it would have slowed down even more. And there are several factors that are driving that. I think all the founders now are aware of this. I think the first one is, look, every venture capital firm, a significant amount of time is being spent with the existing portfolio, because all the existing founders and their companies also need to reimagine, right? They need to extend runway, and so on. And also, the existing portfolio, more capital will be reserved to invest in the existing portfolio companies to make sure that they can make it. So that's the first thing, right? The second thing is, look, this uncertainty that we have, the demand uncertainty, is very difficult especially if you want to write large checks, right? Because you don't know what the revenue curves are going to look like. Is revenue going to come back in a month? It's going to come back in 3 months. When will it get back to February levels of revenue? Nobody can actually tell you. If anybody thinks they can tell you, that level of uncertainty again makes it difficult to, write very large investments, right? Because you don't know, there's a lot of uncertainty with startups. Now, when you talk about underlying demand, so that's the second thing. I think the third thing is, look, at least for the next couple of months, travel becomes a real constraint, right? So if I'm in Shantiniketan, I can't go to my coffee shop in RK Puram where I used to meet startups, let alone go to Noida. People in Bangalore can't come to Delhi. India used to have a lot of investors from the US and Singapore and China. They can't get on planes anymore, right? So because of, these are factors that are really, that have caused a slowdown already, and it's going to slow down. Now, that being said, look, investments will continue to happen, right? And if you look at Sequoia, where I am, right? In fact, Surge. So I spend most of my time in our seed program called Surge. We started a new cohort last week, right? It's actually an incredible set of companies, right, from India and Southeast Asia. And so we have 2 cohorts a year, and our next cohort starts in September. And we've already actually, selected several companies, right? So every week we're meeting companies, and whether it's at seed level, which is Surge or Series A or B or C or D, on Mondays, Mondays is when we have our investment committee meetings. Every Monday is like any other Monday for us. We have companies that come and pitch, raising Series A, B, C, growth investments, and so on. So there will be firms that will continue to invest. I think the general pace of investments will slow down for the reason that I said. But if you are building a very good company, right, meaning if you are building a company that meets a real need, that has strong unit economics, you're reimagining your business, you can still raise funding, right? Think about us. I mean, we are already, in selecting companies, Nayantara, for the 4th cohort of Surge, which is going to start in September, right? And we are, as Sequoia, we are in fact, I think 2 or 3 weeks ago, we announced an investment partnership with a company called DHAT, which is in the agricultural space, right? So we'll continue to invest. But I do think what has changed. So as a founder, you should be, well, firstly, don't assume you can raise money, right? That we were in an environment for many years where you grew at any cost. You drove a lot of growth in the hope that you could raise your next round of funding, and you just kept growing. I think that assumption is probably not something you should make. Now you should focus on quality, right? Quality revenue, strong unit economics, extraordinary customer love, right? I think this notion of customer love we should talk about. And if you have those set of things, right? If you have extraordinary customer love, you have unit economics that make sense. So for instance, if your gross margins are 2 or 3% and your contribution margin is negative, that is going to be tough, right? I mean, you might still have some exceptions, right? Now, by the way, there are purely digital businesses where you can drive a large amount of organic distribution, right? You get a large distribution, you get, let's say, hundreds of thousands of users who are using your product. They love your product, and therefore you don't have revenue. That's fine. You can grow that, right? But paying for marketing to drive organic distribution without a revenue model, that's called negative unit economics, right? So customer love, strong unit economics, right? And some visibility to a real business model, right? I mean, if you have those three things, I think you will absolutely raise funding. It'll probably take longer than you would like. So one of the things we say is startups, for a long time were, very, very fussed about valuation. They wanted to maximize the valuation. They wanted to shop around, to many, many different investors. What we would say today is, look, if you have an investor that you think can add value to your business, they're willing to invest in your company, don't worry as much about valuation, right? Because, if you can raise the money, because what it does is it gives you more runway.
It gives you more runway. That's what
it all comes back to cash runway, right? Everything comes right back to cash runway. To be in business, you have to be around.
To be in business, you also have to make profit. So what I found to be very funny when I started covering the entire startup ecosystem was that it was as if profit and EBITDA were taboo words. Everyone had some very strange way of calculating whether they're making a profit, not making a profit. Then WeWork happened. Boom. I think, you still got in India, 80% of funded startups that are not profitable. Is that the way to go? Like, it has to stop.
Yeah, so I think, look, as a startup, to be profitable from day zero is possible. There are companies that do that, right? But for many, it's not possible, which is why you need to raise at least some form of funding, right? Whether it's friends and family rounds, or whether it's an angel round or a seed round or whatever. So you do need to, because at the end of the day, you have to build something, right? You have to hire a team, you have to get going, you have to build a product, you have to launch a product, you have to go out there and find a way to distribute it or sell it. So I think profit, as in, like, let's say, profit after tax, right? Yes, you'll see it very, very rarely in a very early stage company, right? And you do, by the way. I mean, you'd be surprised. You actually do see it in companies, but usually it will take several years, right, to get to that. But what is important is strong unit economics, right? So at a simplistic level, the way to think about that, Nayantara, is, let's say I sell a product for 100 rupees. Okay, that's my selling price. If my cost of buying that product is 120 rupees, my gross margin is negative. And there was a fair bit of that was going on. Now that is not acceptable anymore, right? So for instance, what would be really good is if you're selling it for, let's say, 100, if your cost is 25 and you have 75 rupee gross margin, now that is interesting. And now let's say you only spend, let's say you spend 30 rupees on delivering it. That's pretty, let's call it a direct to consumer brand, right? I'm talking about a hypothetical example. And you spend another 20 rupees on marketing, right? And then therefore you end up with something like 20 rupees on 100 rupees, or 20% before you pay for your overheads and things like that. Now that is not, when you net it all out, that may not still be a profitable business, but it's got very strong unit economics, right? And so what you need to be focused on, I mean, obviously right now there are no unit economics for a large number of companies because your revenue is zero, right? Your revenue is zero, but your costs are obviously, costs are what they are. But once the lockdown once we start opening up the economy and once things start moving again, it will take a long time for demand to get back to pre-COVID, pre-lockdown levels. But, making sure that you have unit economics that are positive. Now, one thing that I'm very confident of, Nayantara, is that by the end of 2021, right, the Indian startup ecosystem is going to look very, very different. The underlying health of our startups will dramatically improve, right? Because you have to, right? If you have to, because if you want to be around by 2021, and you have to, even to actually raise funding, because I think investor appetite for businesses with, not, with either unit economics that are non-existent or very weak unit economics are, I think there's very little interest in those kinds of businesses.
Rajan, taking forward from this point, I'm going to now invite some queries, and we'll be getting a lot of them, and some of them impatiently saying, hello, can I get a response to my query? So I'm going to take a couple of them. I'm clubbing them together because there are some buckets that you can see there's a common theme. So here's one from Viraj Badwar, who says, hey Rajan, so the problem in the food delivery space is that ever since the whole pizza delivery COVID incident, consumers are extremely wary of ordering in as well. So what is the kind of visibility one can see there, and how does one see consumer behavior recover from this scare? I've seen another one about food delivery in particular, where they talk about the fact that, now we're all in lockdown, getting used to cooking our own food. what should you do? Because that's a consumer behavior that is changing. Should a startup service like a cook or domestic help change in post-COVID scenario?
Yeah, I think they're both good questions. Look, first of all, before I get into the food delivery, I'll tell you what's going to happen, what needs to happen, right, around the world, including in India. We're all going to have a health passport, right? I don't know what it's going to be called, but we're going to have a health passport. We have a passport now.
Passport.
What you need, right? Like a health ID, right? Our health ID is going to have several things, right? Are we immune to COVID-19? And we will start with COVID data, and then over time it will have many other sort of health metrics, right? Are we immune to it? So you'll have the red, green, yellow sort of coding system, right? So I think the first, and until that comes into place, I think consumer concerns about hygiene, safety is going to be at an all-time high, right? Because I want to know, so for instance, right, let's assume for a minute, and I think this is not like many quarters away, by the way, I think this is coming relatively soon. By the way, I don't know whether you know this, but iSpirit has been working on this thing called the India Health Stack, right? And this is actually a key part of that, which is being able to being able to, issue, the government has to obviously issue this sort of health ID sort of system, right? Now, for instance, if I knew that the person if I knew that the person who cooked the food was, let's say, green, right? Let's call it a green, red, yellow system. Green is, you're totally fine. Either you're immune or whatever, or you've got it and therefore you're immune, right? The person who's cooked it is green, or maybe there are 3 people who cooked it. In the kitchen, it's green. And the person who's delivering it green. All of a sudden, I feel a lot more comfortable, right? If I don't have that, then I'm not comfortable. So I think systems like that need to fall in place for consumer confidence to pick up. Does that mean that, people are not going to order from home? People are going to continue to order from home, but I think it will address some of these concerns. And these are some of the, by the way, and these are all opportunities, right? For startups as well, to be able to create some of these systems and so on and so forth. So I do think, look, food delivery, people will get used to. I think food delivery, this is going to be a macro uptick for food delivery. Now, currently, by the way, one is the health concern, but the biggest issue we have, as you know, is we still don't have enough delivery people, right? Because a lot of the delivery teams have all gone back to, their communities. So we don't have enough people in the cities to be able to, deliver e-commerce or deliver groceries or deliver food. So that's the real challenge today, by the way. It's not the safety concern. Consumers have safety concerns. Now, on the other question, look, I do think there's a new set of opportunities that will emerge. I mean, there are so many people. I don't know, Nayantara, I think I saw a tweet from you, right? You're cooking at home, right? So actually, that is a very interesting opportunity, because in the US, by the way, there's a company called Blue Apron, right? Pre-cooked meals, right? They're not cooked, sorry, sort of things you can quickly cook, right? So chopped vegetables, this, that, in a package, you just take it out and you put it in. I think some of these things now, I don't know how big they'll get in a country like India, but I think there's some opportunities for it. But I think this rent a cook idea, look, I mean, as it is, you're worried about who comes into the house, right? Unless once we get maybe this ID system, whether you're green, red, or yellow, that might be okay. But I think, look, again, right, it comes back to consumer behavior, right? We're going to be much more conscious about our health, about hygiene, about others, right? I mean, all these things I think will create a lot of opportunity. So long answer. Look, I think if you're in food delivery, hang in there. I think you're in a good space. You're much better than, let's say, you've got a cloud kitchen brand, right? You've got a brand that, food brand that you built on the cloud. You don't have restaurants. First of all, you should be really glad you don't have restaurants. And the market will actually be much bigger than what it was before, because of this consumer behavior of ordering in. So I wouldn't worry about the very immediate challenges. In my mind, that is an industry with a lot of tailwind.
Hang in there. You could have had big overheads is the other question that's coming in. I want to get back to you on healthcare. Before that, I'm going to take some more questions, because I also want to talk about the fact that we're in the middle of this pandemic and we don't have a single unicorn in the healthcare space. So obviously there's a massive opportunity. Let's keep that. Let me take some more questions. This coming in from Pranav Bagai. Dear Rajan, most startups are in a situation where their entire business plans have fallen flat. The immediate solution is to furlough people to cut costs. Where do you draw a line between the financial decision and the ethical choice? I'm sure a lot of people are struggling with this.
It's a great question, right? Look, so I think keep in mind that, if you're out of business, you have 0 people you can employ. Okay, the number is 0, right? If you're out of business, the number is 0. Then the question becomes, if you want to stay in business and you want to have a shot of making it, what does your cost structure need to be, right? And it comes back to this cash runway. Because look, guys, revenue is 0 right now. We don't know whether, let's say May 3rd or sometime in May or June. I mean, eventually the economy will get opened up and your revenue will start building back up, right? Revenue is not going to be 0 for the next year and a half, or let's hope not. So your revenue will start building up. But what we don't know is the shape of when that revenue build up is going to come. So the way that I think about this is, right, you either have no company, in which case you have 0 employees, and you are also, including you, you'll be doing something else, or you have a company. Now, if you were to have that company, the question you should ask is, what do you need to do to make sure you actually have a company, right? I would first look at every single other aspect of cost. I think this is very, very important. I don't think, founders, now they're beginning to, but they're not thinking as hard about, like, some people are still paying for offices. Seriously? So if you're an early stage company, you should not be paying for offices, right? I mean, especially if you're a purely digital company. Now, if you're obviously in the logistics and fulfillment and e-commerce space, you need to have warehouses and so on. I'm not talking about that, right? But, for your engineering teams, your product teams, your marketing teams, etc., work from home, right? That probably takes out a big chunk. Look at every single aspect of your line items, right? Whether it's your cloud spends, or software spends, so on and so forth. Because, when things were going well and when we were in hyper growth mode, cost just builds up, right? And then when it comes to your team, look, there are many, many levers that you should be looking at. These are, things that startup founders have been looking at, right? Founder salaries, salaries for your top management team, salaries for the rest of the team, right? Can you ask some parts of your team to maybe, for 3 months, right? There, it's called furlough, right? So there's a lot of different things that you can look at. But the reality is, I think I always bring it back to, you either have no company or you have a company. Now figure out how you can have a company, because if you're a founder, by the way, you all signed up to be founders.
Yeah.
Knowing that it was going to be hard, right? Now we all in the world, 7.3 billion of us, got dealt this card.
Yeah.
Where it's the hardest it's been in 100 years. Okay, that's a long time. But you signed up for this to be, you didn't sign up for this because it was going to be easy, right? Look, obviously it's hard. And to be a successful founder, by the way, you have to make lots of very, very difficult choices over a long period of time. And by the way, and once you take tough decisions, it's very, very important to do it the right way, right? Make sure that you do it the right way, right? For instance, make sure that you help your companies, help your employees who are impacted, find other roles. Now it's tough given the state of the economy, right? But go out of your way to help them actually land somewhere pretty well, right? If you can, take care of insurance for 6-9 months, things like that you can do.
And do you think post-COVID, as you reimagine, this is going to play a critical role in how startups emerge? Because let's say the consumers will, be noticing perhaps, where brand management will also come in saying, hey, this is a really bad startup. This is what it did to its people. Or the investors will also take note of saying that this is a startup that, tried to do business with a heart, or some form of compassion. Do you think this is going to be relevant post-COVID?
Well, look, I think taking care of your teams, right, is really, really important. I think what consumers will care about is first and foremost the product, right? So we've been talking about the fact that consumer behavior is going to change. Look, at the end of the day, we're all going to eat food, right? We're all going to buy shaving foam. We're all, you're going to buy beauty products, right? But the kind of beauty products that you're going to buy are going to change. You may not buy premium beauty products. You may value other things. You may want more natural products. You may want more healthy products. You may want more more affordable products, right? Depending on the demographic that you're in. I think from a consumer standpoint, I think the startups that are deeply thoughtful about how consumer behavior is going to change, consumer preferences are going to change, and change their product roadmaps to align with those changes are the ones that are going to win, right? Because look, what we have been telling all our founders is the business plan that you had in the second week of March, which, believe it or not, was only 4 weeks ago, is no longer valid. No part of it is valid. No part. The revenue forecast, your product roadmap, none of it is valid, right? You got to rethink all of it. And I think that is the thing that every founder should be thinking through is, what changes should I make? Well, firstly, there's this fundamental question, right? What industry do I want to be in? Now, that should be for a small subsegment of business. If you're deeply impacted industry, you don't see it coming back for a long period of time. But for everybody else, right? Like, things like, what should I do with my product roadmap? What customer segment should I target? How should I go to market? How should I change my marketing? Like, for instance, it's amazing. I still see ads of beauty products on Instagram where they're trying to get me to buy stuff. To me, that brand loses credibility in Nayantara for me when I see an ad of a product that's trying to get me to buy, where I know and they know and we both know they can't ship that product.
Yeah.
Why are you showing me an ad?
Yeah.
Those are the kinds of things that make customers lose trust and faith, right? And obviously how you treat your employees and so on are important. I think for investors, I go back to the three things. Do customers love your product? And by the way, there are metrics, right, that we use to actually measure whether there's customer love or not. We can talk about that.
Can you share that? How do you judge that?
For instance, right, like retention, right? Let's say you're using an app, right? Let's say you're doing a consumer internet company and you have a favorite app, right? You download the app, but 10 days later you uninstall it, right? Let's say 30-day retention. If it's less than 10%, you don't have a product that customers love. Your consumers don't love that product. Let's say you bought a beauty brand, right? And you never bought that product again. Repeat purchase, so these things, right? Let's say you're using a SaaS company and every month 10% of your customers are churning, which means within 10 months, your entire customer base is churned. Do you think your customers love your product? No. Retention and churn, right? We look at things like ratings, Amazon ratings, Play Store ratings. Your Amazon rating is 2.8. It's probably not a very good thing. Customers can't love you. So we look at those things. So customer love is one. I think the second thing is unit economics. Investors are going to look at your unit economics. Like if there's, make sure and by the way, this current environment that we're going through, Nayantara, I think will make sure that all our Indian startups will get better at their unit economics, right? Because at the very top end, some of the big battles, will slow down, right? Because, you don't want to keep spending money now when like every order that you sell or every ride you make, you're not making money. And the third one is, do you have a long-term viable economic model, right? So those are the three things that will continue to be involved, including the team, right? Making sure that the team is very...
Rajan, on overseas education. Today there was fantastic graphs that were out on social media as well about, let's say, for example, Coursera, the kind of subscription that Coursera has seen. When it comes to hobbies, of course, we've seen that. Look at what happened to Udemy. Perhaps this year is going to go in a gap year. I don't know. But we are going to see a strain on loans, the financial system, people, not getting scholarships, all of that. How is that going to pan out according to you? And is that an opportunity?
Yeah, look, I think, many segments of education are an opportunity, right? Including sort of international education. So I'll give you an interesting statistic. I don't know whether you know this. There are 17 edutech unicorns in the world. Okay. The most valuable edutech unicorn, right? Privately traded, private sort of startup is actually Byju's. It's Indian, right? So there are 17 edutech unicorns in the world. The most valuable edutech unicorn is Byju's, which is fantastic, right? Look, in the next 5 to 7 years, we're going to have at least 10 new edutech unicorns, right? And they're going to come from different segments. From India, absolutely, right? The reason is because it is the number one thing. You know that this Indian consumer spend on test preparation is the highest in the world. It's one of the few things, by the way, we can look at China and say, we spend more than China, right? I mean, that's a $14 trillion economy. We're a $3 trillion economy, right? That's pretty remarkable, right? We spend like more on test prep than the Chinese do. So actually, then it's not surprising to see that several of these companies that are being built on test prep. But, you look at K through 12, you look at higher ed, you look at, international education. I actually think, even in vocational, right, we'll start seeing some very interesting companies. So I think all aspects of education are very, very interesting. But it's very important, right? Build a product or a service that customers really, really want and make sure you have customer love.
Okay.
Right? And have good unit economics, right? If it costs you, let's say, I don't know, if it costs you, let's say 400 rupees to acquire the customer using digital marketing and you can only make 300 rupees, that is not a good business.
Okay. Yeah, I mean, that should never be a good business.
But we've had a lot of that happen, right? When the capital was free and flowly and there was a lot of exuberance, that era is over. All that the pre-COVID era.
I wanted to talk to you a little bit about healthcare because I know a lot of people want to get your views, and you've been in a lot of webinars talking about India Stack, the unique health ID, which I'm sure if we have privacy watchdogs watching right now, we'll be saying, how can you do that? Do you want to talk a bit about that? Because like I said, there's not a single unicorn in the healthcare space. We have been exposed when it comes to the healthcare infrastructure.
Yeah. So I'll tell you, look, I think COVID, in many ways, what demonetization did to digital payments, right? Demonetization was really the inflection point for digital payments. It was really demonetization and UPI, right? The India stack, especially Aadhaar with UPI, which is why Google Pay is what it is, and Phone Pay was built off companies like Bharat Pay and so on and so forth, right? And Paytm too, right? So firstly, COVID is sort of like demonetization to the power 10 to the healthcare startup ecosystem, right? To the power 10. I'm talking, this is a massive multiplier to that, right? And I think what we're going to see is many different segments of health, wellness, right? And sort of other areas like mental health and so on and so forth. In many segments are going to emerge because of that's why I said it's like much more than just demonetization, what it did to digital payments, right? So let's take one segment that is going to see at least 2 or 3 unicorns for sure, right? It's telehealth. Until 3 weeks ago, Nayantara, telemedicine in India was not legal. A doctor could not prescribe medicine or prescribe anything over the internet or over a phone, right? That changed 3 weeks ago. That's a massive thing, right? Now, if you compare that with what the India health stack is going to do, where it's going to create a very comprehensive database of all doctors, of all hospitals, of all clinicians, clinical labs, and so on and so forth, right? All of a sudden, you'll have 500 million Indians who are connected to the internet using smartphones. Every doctor, and by the way, one of the things on the supply side the last couple of weeks have done is today your doctor, Nayantara, doesn't want to meet you.
No.
Right? They would much rather, yeah, you don't want to meet your doctor, but actually your doctor doesn't want to meet you. So they would much rather prefer to talk to you on the phone or do a video call or do a chat with you, right? So again, the supply side, which was actually, not as enthusiastic about digital, is changing. So that's telehealth, right? Take online fitness. There's going to be, explosive growth in online fitness, right? I don't know about you, but like, I have Prithvi, who's my yoga instructor, who used to come home. Now he's on Zoom, right? I'm just signing up tomorrow for a really interesting online fitness thing that I'm excited about, right? So I think online fitness, right? Then you go down the stream like mental health. Globally, in the developed markets, it's been a massive trend, right? I think India, this period will make us realize that that's really important. So I think you're going to see explosive growth. And then you come to some other segments that are even as interesting, right? AI in healthcare. Right? India is going to, India's competitive advantage when it comes to AI is not actually next generation computer vision or next generation NLP. It's actually data, right? We'll have a lot more data around which we can build algorithms, right? So we're going to see, Indian, globally oriented health, AI driven healthcare companies that are going to come up, right? So that's a whole segment there. And then finally, look, as you might know, the entire startup ecosystem in India got together and launched something called ACT, the Action for COVID-19 team. This is basically all the venture capital firms in India together with many of the founders, right? So, Mukesh Bansal, Abhiraj from Urban Clap, Sanjeev Bikhchandani, Deep Kalra, Vijay Shekhar from Paytm, and Nandan Nilankani, and many others, right? Over 50 founders have come together. We created this thing called Action for COVID-19 team. We created a corpus of 100 crores that we're going to give as grants. These are not investments. They're grants to, highly scalable Indian innovations that are going to go after different aspects of COVID, right? So everything from how do you prevent the spread of disease to how do you actually protect the safety of healthcare workers, all the way through care at home and things like ICU and so on. I can't tell you, we have so many amazing Indian innovations that we're seeing now, right? And many of these, Nayantara, actually will, some of these will scale out to be very big companies. And if they do scale, and the ones that do scale will actually apply to a large part of the world, right? So across the spectrum, right, we are going to see sort of unprecedented levels of innovation. And I think we'd all agree, all of us on this webinar would agree that the number one, number two, number three priority for 7.3 billion consumers around the world for the next 2 or 3 years will be health and safety.
So when we talk about health and safety, which is going to be the priority around the world, and where we are not in the pole position, right? Like I said, we don't have a single unicorn, for example, in the healthcare space. Do you think?
I also want to remind you, 2010 was how many years ago? 2010, by the way, everybody keep remember, 2010 was 10 years ago. Do you know how many unicorns we had in India in 2010?
Zero.
Zero.
Yeah.
Zero unicorns. We have 30 unicorns. So, just because it didn't happen last year, and by the way, it takes SaaS, software as a service industry, right? 2 years ago, India had zero unicorns outside Zoho, right? Because Zoho's obviously been a very large company for a long time, right? 2 years ago, we had the first Indian SaaS unicorn, Freshworks. Then we had Druva. Then we had iCertis. Now we have a fourth one, right? And now we're going to be at a clip of creating 2-3 unicorns. So things change very, very quickly. And I think the great thing about the Indian startup ecosystem is once things start to happen, they scale very, very quickly. So I agree with you. We haven't had a single, healthcare-focused unicorn yet or digital health-focused unicorn yet. But that's going to change. I think over the next 10 years, we'll have many dozen unicorns in the different segments of the health space.
And are we already seeing behind the scenes work on that front? Because I know you guys all talk to each other. Are people already dreaming of the kind of opportunities that exist, how it's going to evolve? Like you said, about telemedicine. People perhaps are not going to go to a clinic or a doctor if they don't need to. Is this possibly irreversible change?
Yeah, Nayantara, telemedicine is exploding. It's just exploding in a positive way, right? I mean, the demand for telemedicine is exploding. I don't know how many, whether you like a couple of weeks ago, I needed to sort of talk to a doctor for somebody at home. Basically went on one of the apps, went on Practo, talked to a doctor. It took 10 minutes. He prescribed something. That lab test wasn't available on Practo. So I went to 1mg, basically ordered a lab test. Next morning they came, took the, by 3 o'clock, 3 p.m. I had the lab test report, sent it to my original doctor on, and basically without leaving this exact spot that I'm sitting in today, right? People to get everything done, right? Why on earth am I going to go to some health clinic now and take the risk of God knows what I'll get,
Yeah.
So obviously there will be times when we'll all have to go to the hospitals and the health clinics. But I think this telemedicine thing is going to be gigantic. And already the kind of growth that we're seeing, it's an exponential. By the way, it's probably a curve that looks even steeper than the COVID curve, right? The telehealth curve looks, it's like, it's doubling like every few hours, not like every day or every 2 days, right? So, look, telehealth is that the telehealth station, the train has left the station, right? We are certainly going to see several unicorns that will emerge in the telehealth. So there's some of the existing players, right? I mean, we have some companies like Practo and 1mg and Mayapchar and so on. There's quite a few, right, that have actually launched telehealth services. But that's just one part of, I think, the digital health ecosystem, right? There's no question we'll see 2 or 3 very large companies in the digital fitness space, right? Because again, right, I think as consumers, at least the first 100 or 200 million consumers, we're going to be so much more conscious about our health and our fitness, right? This is going to, I mean, this is sort of pretty profound, right?
I'm seeing a lot of questions, and if you would indulge me, on China that are coming in. One, that do you expect that you will see consumer behavior turn against China, and therefore that could impact startups that have an exposure to that? And the other ones, a lot of them about sourcing hardware from China. Like, could that be an opportunity because you may have to give up on that?
Yeah, look, I think the multiple questions there, right? So I think let me maybe start with the easier one. Look, in terms of hardware, look, I mean, global supply chains will be active, but I think countries more so, in many ways, this trend of globalization that played for many decades, really started being challenged about a year or two ago, right? Where countries were getting much more nationalistic. I think what this experience is going to do for many, many countries, they're going to want to become self-sufficient, right? There are some news reports last week or 2 weeks ago, they were probably not correct, that the US may have been, was at risk of facing a food security problem. Can you imagine the US having a food security problem? I mean, that's crazy, right? So I think every country will try to become self-sufficient in as many things as possible. Obviously, no country can be self-sufficient in everything. So similarly in manufacturing, I think India's, as you know, has been, we've been trying to become a manufacturing power for many years now. That hasn't materialized. Although in electronics we have, right? I mean, if you look at electronics, actually, I think MeitY has had a lot of success with Invest India, and MeitY have had a lot of success in electronics manufacturing. So I would say, look, is it yet time to try to build a company that's going to take Xiaomi on in the smartphone business? I don't know. If you're a founder, maybe there are other problems that you should focus on that can help you build a very large company. But I think this experience is going to cause more and more countries to try to become more self-sufficient, right? In the most critical areas that are important to them. I think you'll see that, and that'll have implications on many countries around the world.
I like this one. Even I'm curious. Please recommend books that a startup founder should read, especially during these times.
Yeah, that's a great question. I would say, look, instead of reading books, if you're a startup founder, and the reason I say that is because you should be focused on reimagining your business,
Okay.
right? I would start by spending an enormous amounts of time talking to your customers and really understanding what are their priorities, right? Because your customer priorities are changing very, very rapidly. And the best way to reimagine your business is to deeply understand how your customer priorities are changing, right? I would say, and then go through every aspect of your startup and try to figure out how you can reimagine. And by the way, there are books that you can read on, I suppose, how to reimagine your business. But you're the one who's got to reimagine your business, right? And the way to do it is talk to your customers, spend a lot of time with your team, brainstorm with your team, try some experiments, right, that may or may not work. Like for instance, right, there are some things that are, for sure. E-commerce is going to accelerate. Consumers are going to spend more time on digital. Many parts of the digital ecosystem are going to accelerate dramatically. International travel is going to be super hard for a long time, right? I mean, you don't need to go read a book on some of these things, right? But I would say that's one of the things I'd like founders to do a lot more of in this period. I mean, look, founders in general spend a lot of time, B2B company talking to their customers, if they're building a B2C company, observing consumer behavior. But I think this is the time to really get very, very close to your customers, because I can tell you, it doesn't matter which industry that you're in, your customer priorities are changing as we speak. And if you're on top of them, you will find the ways in which you need to reimagine your business. If you're not, you're going to assume that what you had 4 weeks ago is going to be relevant when we get out of this, and it won't be relevant.
I like this one too. As a fanatic sports watcher, which I can't do anymore unless I watch old matches or old games. How do you see sports ecosystem change? Will it only be esports markets that are going to grow?
Yeah, look, I think we will get back to offline sports, right? I mean, you look at IPL, right? It's the most valuable news.
We've got Tokyo 2021 coming up.
Yeah, created in the world, right? Look, I think what I really love about the sort of the human race, Nayantara, is we will figure it out. And you have the smartest people in the world who are focused on sport, whether it's BCCI or Star, because they have the rights. They'll figure it out. Look, I don't know how it's going to change, but you could imagine, right? There'll be these games, but maybe there won't be as many people in the stadiums, right? Because anyway, most of the money is made off things like television rights and digital rights and whatnot, right? Look, clearly for esports is going to grow for sure. But I think a lot of these sports in the next year or two, I think they will have to reimagine them so that they don't have the same environment, right? I mean, having 100,000 or 150,000 people show up at Wankhede Stadium to watch an IPL match, that's probably something we don't want to do until we have a vaccine. It may still happen. You never know, right? With our consumers, but may not be the right thing to do until we have a vaccine. So how will cricket happen, right? I don't know. But it has, again, right? It has to be reimagined. I don't know what it's going to look like because I don't spend any time on that. But man, that's a great example of something that has to be reimagined. Again, it brings us back to this theme of reimagine everything.
Before COVID and before, the run up to COVID, everything was about how you should have, it's all about experiences. You're rich in your experiences, right? Now we can't be rich in experiences, and that also has to be reimagined. For example, look what Airbnb has done, such a fantastic job, right? You can cook tapas with your host in Portugal at 1 a.m. here, or do magic in London, whatever. Airbnb's done that. You've got someone like Andrew Lloyd Webber taking out plays on YouTube, something you would have to spend a lot of money to do. So in that space as well, experiences, you can't go on holidays, you can't travel. Isn't that also something that people need to reimagine?
Look, I mean, absolutely, right? I think experiences will get reimagined. So I'll tell you, at at Sequoia, right, we used to sort of get together in the office and we used to do various things to have fun, right? Now, once a week, the daily office, the few of us in the daily, we do a daily huddle, right? A weekly daily huddle. And what we do is today, there are all these very interesting tools on Zoom, there's this, where you can play these games, right? Where, we did that. We do that for half an hour, 45 minutes. Last week, we had something that went on for an hour. Which is really interesting. Actually, in the office, we never spent an hour, all of us, right? Like doing sort of a team building thing, and we're doing it on Zoom, on virtually, right? So I think, look, everything is going to be reimagined. I think that's a great example. Look, by the way, also don't get me wrong. I do think 3 or 4 years from now, we will be back on planes. We'll be going everywhere. We'll have all these things called health IDs and, lots more systems to measure things like temperature and, all kinds of things, right? So we'll be back on planes, right? But it'll be different. We may not, we probably won't go to places that don't have the level of hygiene, don't have the systems in place, right? Et cetera. So, look, at the end of the day, we will travel, right? I mean, even if you look at 9/11, if you look at what happened to air travel, 9/11, there was sort of a dip, but then, now it's like orders of magnitude more than 9/11, right? And 9/11 was pretty scary. Now, the only thing is that was only in one city, in one country, New York. This is happening everywhere around the world. Yeah. But I do think all these things are going to be reimagined. I would say, look, if as a startup founder, if you're not spending a lot of time together as a founding team with your team, figuring out how you're going to reimagine your business, I really worry. Because as you said, right, these things are changing, right? They're pretty profound changes.
You've been so positive and optimistic ever since lockdown happened. I'm going to ask you, Rajan, how do you get that dose of positivity? Because and you have the job of where you have to mentor startups, founders. How do you not get drained?
Look, I mean, it's a great question. Look, first of all, much like 7.3 billion people in the world, right? I'm deeply concerned. Right? We have the biggest healthcare crisis. We have a massive humanitarian crisis. We have an economic crisis, which we haven't seen in 100 years, right? And therefore, that is going to create, huge amounts of challenges, right? We have parents, Radhika's parents, right? Your parents, we worry about all these things, right? But, I learned a long time ago that, you should be concerned, you should be worried, but focus on things that you can control. Right? What can we control? At the end of the day, we've got to focus on things that you can control, right? We can control our safety, our family's safety. We can make sure our teams are safe, make sure our teams are engaged, right? Make sure that you're talking to your loved ones a lot because they're all worried, right? And then when it comes to your business, there are things that you can control, right? We can't control when demand is going to come back, right? Quite frankly, I don't think anybody in India can tell you whether the lockdown is going to end on May 3rd. Will there be an extension? I don't think we know because it all depends on what's going to happen in the next 10 days. Right? It depends on what's going to happen in the next 10 days. And nobody can predict what's going to happen in the next 10 days. Yes, we have models. And so I think, I come from this school of thought, Nayantara, that focus on things that you can control, right? And be very thoughtful about those and then be decisive, right? So in many ways, I think leaders who are going to be successful, it has been true, by the way, in the past, it was be thoughtful and be decisive. I'm adding 2 other traits to leaders who are going to be very successful and make it through this successfully, right? They're going to be very thoughtful, but they're going to be extremely decisive. They're going to be very empathetic. Yeah. And they're also going to be vulnerable, right? Because you have to be vulnerable with your teams, right? You have to be vulnerable with your family. You should talk about the things you're concerned about because because this is not just an economic crisis, right? It's a humanitarian crisis. It's a health crisis. People are worried about their lives. So, I tend to just focus on things that I can control. I try to be, I try to be thoughtful. I probably get it right sometimes. I don't sometimes. I try to be very decisive. Right? And I try to encourage our teams to be very decisive, our founders to be very decisive, but also, really try to be empathetic because I think empathy is so important right now, right? And because without empathy, I think it's very difficult to make it. You asked this question, right? Like brands should be empathetic because your customers, by the way, can see. They won't know what you're doing with your teams, but they can see it in your products. They can see it in your messaging. Right? So those are the sort of things that you can do because I think if you focus on things that you can control, right, then you tend to sort of get there, right? I mean, if you're a startup founder today, look, you have 2 choices. You can be around or you can not be around. Let's start there. That's a pretty, that's a pretty, simple sort of thing to start with, right? And now let's say, look, you want to be around? Okay, now let's work on that. and let's figure out what it's going to take for you to be around.
And on that note, Rajan, I know the clock is showing that it's time for you to go. You promised us an hour. We had a technical glitch in the beginning, so I apologize to you and the entire team and everybody else who tuned in for that. Sorry for that initial glitch. But Rajan, it's always so great talking to you. Thank you so much for your various ideas. I can see lots of questions that are coming in, ladies and gentlemen. Sorry, we're totally out of time. And Rajan, stay safe, stay healthy, and I guess keep practicing social distancing.
Thank you. Thank you, Nayantara, for hosting me. And I also want to thank all our founders for joining in. Remember, you became a founder knowing that it was going to be very difficult. It's going to be much, much harder than what any of us expected. But this is your moment. So reimagine, and we know you'll win. Thank you. Stay safe.
Bye, guys.